who's really going to be able to take the most advantage of defined benefit plans?
Yeah. There's a
Aside from the
couple
fact that they're in the
qualifications. Great
Chicago
question.
area.
It's Chicago's great, but we have clients all across the country.
There you go.
Once they hear about this, it's nationwide because of the ruling. So qualifications, certainly the older one is, the more it makes sense, typically in their 50s or 60s. High income earners, so 300K, 400K plus in income. In addition to that, having a small business or an independent contractor or someone to that effect that has not a lot of employees, as we had talked about. The more employees you have, the more you have to contribute, the less it probably makes sense for you as the business owner. And so if you fit the bill of a significant amount of income, in your 50s or 60s, and you own a business or pay 1099 contract, you want to seriously look at this. Because people will ask it when we have these conversations with potential clients about this, they ask us, this sounds too good to be true. What is the catch? And the catch is you have to qualify. That's it. And if you don't qualify, we don't have an answer for you. If you do, it's a no-brainer.
Those are the primary, most of the type of clients that we have. Then there is sometimes the outliers where like a spouse works and has self-employed income, even if they make 50 or 100 a year, not even, I mean, that's a lot, but like they can just put the whole thing in a defined benefit plan. So it's all, if you come across a scenario or you're a person who has this extra chunk of money that you'd like to not pay taxes on to Uncle Sam and have it grow on your benefit, then you should at least talk to us. You get this monster huge tax break up front. But imagine you put in 150 grand a year and it saves you, I don't know, 60 or 70 grand in taxes, and you do that for 10 years. You now have set aside $600,000 to $700,000 that's in your name, that was Uncle Sam's, and then growing. And that becomes $1 million to $2 million someday. Like you literally have this huge extra chunk of money that you can live off of 100% because you just saved a bunch of money in taxes. That is the master superpower of this kind of plan. It's not just the tax benefit initially, it's the monster tax benefit later on.
There are a lot of areas where, people can do it. You can see this video, you can watch some other content. It's like, yeah, okay, that's great. These are experts, but I can do it myself. Defined benefit something you don't want to be messing around trying to do that yourself. Like you really can't. If you want to go pick your own stocks, knock yourself out, open a Schwab account and go do it. If you want to go say, there are ways to do your own financial planning to some extent. I mean, I'm a CFP and I wouldn't try to open my own defined benefit plan. You know what I mean? There's a lot of moving parts in there that you really do. You need a specialist and an expert to help you with that.
Yeah, you need the accountant, which is easy. The accountant just wants to know how much you put in, but you need the actuary for sure. I mean, that's something for sure. And then having a financial advisor like us or someone like us who actually knows that. We're really kind of what we position ourselves when we tell people is we're like the quarterback of all of these different parties. Because then you have to make sure you manage the money correctly so you're not like having that massive swing of like, I don't even know how much I'm supposed to contribute because I did I lost a whole bunch of money, like James said, in a bad year.